Last week, Jerome Powell tried to shift investors' attention away from risks of accelerating consumer inflation in the United States. He noted that the labor market is the most accurate barometer of current economic conditions. This week, market participants will follow the advice from the Fed's leader. On Friday, the Labor Department is due to release a crucial report on employment for February. Apart from consumer inflation in the United States, traders are keeping close tabs on trends in the European economy. This week, traders are mostly interested in retail sales data for the European Union. Consumer activity in 27 EU countries is expected to slow down in January. Analysts warned that retail sales could have dropped 1.3% on year in the first months. Consumer inflation is to blame for such a decline. The market found out about a higher CPI from the inflation data posted on Tuesday. The contraction in consumer activity will force retailers to nudge prices down, that in turn will revive deflation in Europe. In this context, the single European currency is set to weaken. In the early American session, market participants will be alerted to a weekly update from the US Labor Department. As usual, on Thursday, investors monitor changes in unemployment claims. On March 4th, traders are braced for pessimistic data for the week ended on February 27. The number of first-time claims for unemployment insurance is unlikely to increase, whereas the number of continuing jobless claims could be almost flat. Such data will be considered negative information. Earlier on Wednesday, ADP payroll processor disappointed the market with a dismal data on employment growth. So, traders have low expectations for the labor market metrics ahead of the official non-farm payrolls. In fact, ADP employment reports and government data seldom reveal different trends. There is a widely reason to reckon that the Labor Department will release worse than expected data. The forecast is also gloomy. Under healthy economic conditions, the labor market creates 200,000 jobs per month, which is viewed as a normal employment growth. However, analysts estimate that the US public and private sectors added to just 133,000 jobs in February. To make things worse, the unemployment rate is expected to grow to 6.4% again. That will certainly dampen investors' optimism. On the other hand, if the actual data surpasses the consensus, investors will comment optimism that will have a long-lasting effect on the currency market and trading sentiment throughout the next week. You are watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.